Alright guys, so who needs enemies when you have Donald Trump as an ally? Now we keep saying that the biggest enemy of the US is the United States itself. China and Russia, they have nothing on US economic and foreign policy. And Washington itself is the greatest stumbling block on the US economy. Now just imagine the situation if you're Trump. You have just struck Iran, you're trying to contain China, and the situation in Ukraine is far from settled. Now, what would a strategic person do? You would unite with your allies, get the G7 together to put up a united front against your biggest economic rival, which is China. But no, he has to be the king of the world, dishing out punishments like desserts. And this time, Canada is caught in the crossfire. Even Carney is getting hammered by Trump's ultimatum. Now, Trump is angry that Canada is about to impose a tax on technology services. And this law was in effect for more than a year, but this time Carney wants to collect the money, which to be frank is nothing wrong. If the US wants to slap the world with a goods tariff, other countries can impose their own punishments on US exports. The digital services tax is a 3% hit on company revenue earned from Canadian users, so it will be on the back of big tech giants like Amazon, Google, and Apple that will be paying the Canadian government. But here's the big catch as well, it's retroactive, so the taxes will include payments all the way back to 2022. So there will be a big multiple billion-dollar bill hitting all the big technology companies. And we know in this season of The Apprentice, Trump's best friends are the tech bros, the tech companies, not the bankers, not even really the MIC, but Silicon Valley. And that's why he's so upset. One look at America's trade balances and you realize what we mean. The US has a positive $35 billion trade balance with Canada when it comes to services, and that's an enormous amount of surplus for a country with a big overall trade deficit. And if we use Trump's logic, isn't the US screwing Canada over? That's why this entire trade war is just so bizarre. It's a move of desperation. Under closer scrutiny, the argument collapses. But imagine Canada taxing that trade surplus. And this is why Trump is fuming mad. There are very few countries that are running a deficit with the US economy. And as a consequence, he gave Canada an ultimatum. Either you drop the digital services tax or the US will terminate the trade talks, which means the 25% tariff will stick and come into effect in just a matter of weeks. And obviously, this will hit Canadian companies hard. A 25% tariff is no joke when almost 80% of your total exports goes to the US. But let's not get it twisted, the US is not in a great place either. It's like a boxer trying to act tough, but when he has also taken multiple body blows and he is on the brink of collapse. Except this time, the US is facing over 100 opponents, not just one fight on the other corner. Now, in 2023, the US imported around $430 billion worth of goods from Canada, and there's a good split between the final consumption goods and intermediate inputs. And that simply means the cost to consumers will be heading up. US industries will also have to pay more, not exactly an ideal situation here. And let's not forget Chinese exports to the US are tariffed at an insane rate as well. Not working out a trade deal with your G7 ally is just silly and reeks of hubris. But then again, Trump is going to do what Trump does. The big concern today is how the US economy is starting to shrink. Now, Q1 GDP is negative 0.5%, we all know that, and that's a very big significant drop. However, the stock market is still divorced from reality. It still believes the economy is fine and Trump's tariffs are essentially a non-event, which is just downright bizarre, not to mention extremely risky. Now, the S&P has made a stunning 24% rebound from the April low. Now, as an investor, I am happy about this, right? My portfolio is growing, but it still stings to the high heavens. Complacency is at a record high. Interest rates are still high. Besson can't afford to deficit spend more, and we are still in a crazy high tariff regime. So it's really good to pay close attention to what's going to happen from here onwards. And I keep coming back to this point. 70% of the economy is from private consumption, and it's not looking good. This is not fear mongering, but just the facts. There is a domino effect that could trigger a deadly cycle. People's mortgages are high, inflation is not dropping fast enough, and US companies are passing costs on to their consumers. And there's simply no escaping the headwinds coming for corporate earnings. Personal consumption in the US fell by astounding 0.3% after adjusting for inflation. Now, what have we been saying for months now? Consumers will get crushed under the weight of the tariff war. And in services alone, we have gone from a solid 2% monthly growth down to just 0.7%. People just aren't consuming as much as before, and almost every industry is getting hammered, despite Besson's insistence.
And many on your side seem disappointed that there is no inflation today. As a matter of fact, we saw the best inflation numbers since 2020. So there has been nothing passed on. There has been no tariff recession. So no inflation, no recession due to tariffs.
Sorry, Mr. Besson, what you just said isn't true. US consumers are suffering and the numbers show it. We don't even need to go into the stores to realize shoppers are frustrated and people are broke. And the problem with Trump's tariff war is the future of US trade with the world, and we can expect other countries, including Canada, to slowly diversify away. They will trade less with the US and shift exports to other countries like China. And I think the Chinese will be overjoyed to buy cheaper Canadian oil instead of US crude. But let's shift our attention now to Russia and the frozen assets. And for many years, we always wondered why Putin was so chill about the confiscation. In all respects, $300 billion is a lot of money, and I don't care if it's China, Russia, or even the US. Taking away 300B is going to sting. And think of all the social welfare programs or how much military gear you can buy with that pot of gold. But it seems that Russia was thinking very far ahead. In a big statement, Putin mentioned how the theft of the frozen assets was a worthy price to pay. It's peanuts to break the G7 grip on global finance. Well, guys, you were all right all along. I always thought Russia wanted the money back. Hell, I would want the money back. But Putin is willing to let it go to win a bigger war. Putin mentioned how a significant amount of Russian gold and currency assets is frozen in Western banks and hinted on how that amount is probably gone now. And in all truthfulness, he's probably right. Looking at the state of G7 today, especially Europe, they need all the help they can get, even if the help comes from the frozen assets. And that's why the global economy today is one big comedy show. Europe is working with the US, who's punishing them with tariffs, while trying to punish Russia, who's their direct neighbor, and in the process, losing cheap Russian gas. Up is down and down is up. But there will be consequences here. Russia is part of BRICS, and their alliance with China is near unbreakable. That $300 billion is seed money going towards breaking Western financial hegemony. And here's what Putin said at the summit. We are certainly committed to keep strengthening our own financial settlement instruments. We will be doing it in collaboration with EAEU participants and other like-minded friendly states. And it's critical we understand this. There are many pillars holding up the entire Western financial system. There are transaction currencies, there's the banking system, and also investment assets. And if we cover every single segment, this video will be 10 hours long, and 10 hours probably won't be enough for the mess started by the Biden administration. But let's cover reserve assets and why Russia will never return to treasuries or EU bonds, because there's simply no point anymore. Russia's gold reserves have surged by almost $100 billion, and that's a whopping 72% increase since the beginning of 2022. So a third of the confiscated assets have already been recovered by the price appreciation. And these are the declared reserves that Russia is showing to us. We have really no idea how much gold is in Chinese custody as well. I'm very sure the Kremlin probably has more than 2,300 tons. And by 2030, we can expect the price of gold to rise 4,000 or even 5,000 is very likely on the cards. Won't be a surprise if it actually goes higher. Because what other assets can Russia buy now? Putin piles into treasury debt or buys EU bonds. If he does that, he will forever be sleeping with one eye open. So Russian reserves will likely flow into either Chinese assets or gold. And just this alone takes away a big bit from the market into the Western financial system. And speaking of gold, we have big news within the G7 themselves. Even members of the Western Club don't trust one another. Leaving gold in the Federal Reserve is making G7 allies sweat. Germany and Italy are now being pressed to bring $240 billion worth of gold back to the US. But wait, wasn't the US supposed to be the perfect custodian of reserve assets for G7 allies? Well, apparently not. Biden started the ball rolling, but Trump really sounded the alarm. His one sided quarrel with Powell is freaking US allies out, and we have no idea what could be coming down the road. Will the US grab every single ounce they have in the vaults for forced revaluation? Maybe give Germany and Italy paper dollars back and then revalue gold the next day? It's unlikely but 100% possible. Or maybe the gold will simply be stuck there because of paperwork, right? Who really knows? But the Italians and the Germans better get their bullion out of there just in case. In 2013, the Bundesbank decided to repatriate 674 tons of bullion back to Frankfurt. They withdrew lots of volumes from Paris and New York back home, but there's still a lot of German gold sitting in US vaults. At least 1,200 tons still remain. So if I were the Germans, guys, it's time to bring all the gold home just in case. There are also rumblings in Italy to bring home their own stash, but Meloni is very silent about it. She probably wants to preserve the peace, and this fundamentally shows a big crack within the G7 itself. Now imagine the response from Trump. Maybe he won't confiscate it, maybe he won't even delay the shipments, but he could always jack the tariffs up to high heavens, and that's his favorite weapon of choice. Now, of course, the Bundesbank is rejecting the idea of bringing the gold home, but we best believe this is now a real concern, whether they want to admit it or not. But the bigger worry is the fate of the dollar. Now, since the start of the year, the dollar has been crashing. It's over 10% down from 110 to just 97. And even if we disregard all the tariffs, foreign money in dollar assets is a losing game. Will the dollar rebound? Possibly, but this is likely a structural change. The tariffs has caused a fundamental shift in everything. So Trump better prepare for countries to do their own pivot. Now I'm sure more US bonds will be bought out of fear, but on a percentage level, foreign holdings will drop. And where else will the money flow to? Just ponder on this a little longer, and I think you already know where. But let me know what you think. Will Canada fold to Trump? And was it worth it for Russia to lose the $300 billion? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.